And it's not just the tech sector moving higher. Other parts of the U.S. and global markets have also been rallying, just not today. The Dow was down 3 points. We were at 26,449 at the close. The Nasdaq fell by 4. The S&P 500 slipped by 6. Bob Pisani, though, has more on what has been working for investors.
The U.S. bucked the uptrend in global markets on disappointing earnings from IBM and continuing weakness in healthcare. But markets in Europe and Asia were up as China reported better first quarter GDP numbers than expected. GDP has been declining for years in China. The anticipation of a bottom there is the main mover of the global stock market in the past couple months, on the heels of the massive stimulus over there and the hopes for a trade deal. The S&P 500 isn't the only major index at or near a new high. Stock exchanges in Russia, in China, in Saudi Arabia, all at 52-week highs. India is at an historic high. The other main mover of stocks has been earnings. Fear of an earnings recession, 2 or more consecutive quarters of declines in earnings on the S&P 500 are dissipating as China avoids a meltdown and Europe kind of just muddles through. Analysts dramatically cut earnings estimates in December on those fears, and they appear to have cut too much. Just look today at the companies that are beating earnings by very wide margins, including Netflix, Morgan Stanley, and Textron, all beating earnings estimates by double digits. That's far more than the typical earnings beat of about 3%. Only IBM, with weak earnings growth and negative revenue growth, was a major disappointment today. As a result, many sectors in the S&P are at or near new highs: technology, consumer discretionary, consumer staples, and communication services. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.